meeting is being recorded. So everybody gets to say, got it? Okay, and this is my first time teaching this class. I've done this kind of concept several times, but not following this format. So I'll be a little odd at a couple times, but also as we're going through stuff, just jump in if you have questions. It looks like there's only like 4 or 5 of us, and we will not go the whole 2.5 or 3 hours it's supposed to go because we'll get through it all pretty quickly. Okay, so welcome to today's session where we'll be discussing habits to build a financially sound real estate business. I want to make sure the screen share is moving. There, okay, there it goes. So I am Mike. You all know that. I was supposed to introduce myself. Basically, what we'll do during this thing, please try and just stay as focused as you can. I know, there's lots of deals going on right now. Actually, there aren't. So if you got to step away, please mute yourself. But otherwise, we'll just try and get through things here. Also, the stuff that's on here is basically to help us, to help us learn how to set up our finances the best way from day one, rather than after the tax man says, wait, you didn't do that right. So, and it's more than just the taxes, but there's a lot of different things we're going to look at. Okay, so the goal of our time together today is to teach you the habits to build a financially sound business. We'll be employing techniques and models used by the most successful real estate agents for managing how each commission check is handled, and how we use our money to build a bright future for ourselves in real estate. So that's the thing, is figuring out a system, because typically when we get in, the first thing we do after that first sale is, number one, we pay off the debt we used to start the real estate world, but then we buy something fancy and shiny. And so we got to have a balanced system in place. So there's 2 things we really need to be doing every day. Number one is growing our business, which is basically these 4 things. And you notice on that first slide, it says something about systems. Everything here is based on the stats of agents across the country. So it's saying, here's what's happening, and here's what seems to be the ideal nationwide. So if it's working for a lot of people, it's probably a good system to follow. So growing the business, every day we need to be lead generating for buyers and sellers. Make seller listing presentations and get listings. 3, make buyer presentations and get listings. And by listings, that means people signed as buyers. And number 4, preview real estate. Then there's the side of running the business, which is marketing seller listings, showing buyer houses, negotiating contracts, transaction management, all the way to closing, unless you're using a TC, vendor management, which is your people who help you, like your HVAC people, plumbers, and that kind of stuff, set goals, compliance and risk management, attend training and get coaching, and manage money. And what's funny is I read through that all, number 4, 5, 7, and 8 can all be helped by having a transaction coordinator who does a lot of that stuff for you. But the thing we're talking about today is number 9, managing the money. But the more on the run side you can put on somebody else's plate, the more you can grow the business. So as things go, just keep that in mind. Okay, so our perspective. Think back, how many of you just recently took classes? Josh was kind of recent, Nathan I think was. David, did you redo? Did you have to go back through everything again?
Unfortunately, I did. I had to take the whole course again. I thought my license was put in active, but that's been 12 years ago. So
got it.
I had to take the whole thing again.
So everyone went through the class recently. Do you remember the spot where they taught you how to handle your finances? Probably not. They usually don't touch on that at all. It is learning how to take the test. That's all. So what's that? So for most people, the answer is no. So that's why we're going to dive in today on how to handle the money based on the systems that work with the Keller Williams models and systems. Okay, so we are known for models and systems because we look at what works for people and figure, why reinvent the wheel? If it's going to work, it's one less thing to worry about. Most of this comes from the MREA, the Millionaire Real Estate Millionaire Real Estate Agent. So as you look at these slides on the slide, you'll see a lot of things on here. Here's the way to have a financially sound business. Number 1, set a profit goal that funds your big life and pursue the activities to achieve it. Number 2, estimate, save for, and pay your taxes on time. 3, use the proven models and systems of the MREA chart of accounts. Be fiscally savvy by reviewing your financials monthly. That's usually done by what's called P&L. And there's a variety of those too, but profit and loss. Number 5, foreign concept to a lot of agents, pay yourself a salary. And number 6, prepare now for a financially secure future. Okay, first year in the business, all that is hard to attack at once. The big things though, is setting a profit goal, not thinking of profit as what you get after everything else. It's a whole different mindset on how to do that. A lot of agents confuse income with profit, and there's a whole different income we'll talk about and dive in a second. A lot of agents don't save for and pay taxes on time. Is anybody right now paying quarterlies? You probably don't need to yet. Okay, once you've gotten into it several years, your accountant will say, hey, the government wants their money more often than at the end of the year. And they divide it into 4s and say, you got to pay this first quarter, this second, this third, and this fourth. So you've got to start putting that back and assuming that you're going to be doing that anyway. The next thing it says on here on my side is make sure you understand your financials and don't just try and wing it or just try and spend whatever you have each month and hope there's money left over. And you need to plan for a regular monthly salary, which is a little bit harder down the road, but we can get to that. Thought I saw somebody else hopping in. I didn't. What we won't have time to go through today is how to deal with the exact fundamentals, like the deep dive into the different accounting numbers and that kind of thing. This is sort of the overview on how to set everything up. Great quote from Gary, money is good for the good it can do. Number one thing a lot of people think is money is bad. It is not. Money is a tool for doing other things. And that's actually the purpose of business. And with profit from business, you have the money to do good for your family and your community. I love to work with new agents, and I keep telling them, our goal is to help you have a life so big that you can bless other people. And that's the idea of it, is to build things that'll go that big for you. So when you set your goals, you need to be aware of how many transactions you need to close to reach your financial goals. This is the money you'll use to fund the big life that we were talking about earlier. Today, we'll talk about the practices to get that all set up and how to figure out what you need to make that amount of money to make your life the way you want it. Okay, so here is an example of the typical agent on their first commission. Let's say they sold a house on the left and made $9,000. This is Jessica Campbell. I don't know where we got her name from, but that, let's see, $9,000 after her split. I think that's the number they're using there. So she brought $9,000 into the company. It assumes she's on a 70-30 split with a 6% royalty. So the money to her was $57.60. A lot of agents that go straight in their personal account and then straight into their wallet. If you do that every time, you're not going to be saving and putting things back for what's going up. So on the right, it shows sort of a better system. Your sold commission is $9,000, which comes to the company if you're not capped. Of that, $57.60 comes to you. Then I think that's going to be 30%. Yeah. The idea is what's called 40-30-30. 30% is what you need to run the business. So that's the $1,728. Then the rest of it is going to her personal bank account. From there, she's taking her chunk and putting into savings, which I think on her example is 30%, which sounds high for a lot of people, but I always looked at myself as my own refund at the end of the year. I'd rather pay into me, be getting the interest during the year, and if I don't have to pay extra tax at the end of the year, refund from Mike's savings account rather than from the government whenever they get around to sending it. So on that example, $9,000 commission, $5,700 to Jessica. What's actually there for her to spend is $2,400. So you hear all the people that are getting into real estate because they're going to make millions and millions and millions, but it actually costs a lot to get it going. So just keep that in mind, and we're going to work into some of the ways to develop those numbers. Okay, so again, this is make sure it's switched for me. Yeah, this is the stats they're going to use for a practice run here. So it tells me to tell a personal story or someone I know of. We had an agent here last year who had sort of put money back for savings for taxes, but did not really go off they just sort of thought, well, I think this is enough. And then the tax bill came. And guess what? They owed, I think it was $30,000 extra dollars. And they had already spent that money. So now they have to do quarterly payments or take a loan to pay that. And then you got to set up 30,000 for the next year, because the government now assumes, well, if you made that last year, that's how much you have to pay this year. So 30,000 divided by 4 means every quarter they had to pay in $7,500 also. So the big thing is, you've got to realize the government's going to come get their money one way or the other. You might as well save for it at the beginning and have it all set up. Okay, so MREA models, there's 2 different things that they talk about in the Red Book. The economic model, and I don't have where I can get it up right now, but I have a spreadsheet where you can punch in how much you want to make, and it'll automatically calculate how many houses you need to sell, which also means how many appointments you need to have, which means how many people you need to talk to. So that the economic model is based on figuring it from that side. This shows 2 different things here. First of all, it shows the stats. The typical percentage that is seen as good in the real estate world is to make a 40% profit. The figures say that there's a 30% cost of sales, 30% operating expenses, and you get the extra left over for yourself and your taxes. That is actually high. Like anybody that starts a small business or a franchise, they are typically hoping to get about 6% profit each year. Like if you bought a Subway restaurant, I think that's the average they're still looking at, is a 6% net income or net profit after all the expenses. So real estate is where we can make a lot more money. So for easy math, they just set that on a $10,000 sample commission check. So if 10,000 came in, you want to keep 3,000 for your cost of sales, 3,000 for operating expenses, and 4,000 is then your profit. And we'll talk about what the cost of sales and operating expenses are on a couple slides here also. The key word that you'll hear a lot here is lead with revenue, not expenses. Another way I've heard people say that a lot is they say pay yourself first. And that to me always meant wrong. That meant, well, I've earned this money, I should spend it. And that sounds like you're not going to have enough. But the idea is, if you assume that you need to make this much profit each month, and that comes out first, then you're going to make sure and get the rest of it done. If you go the opposite way and say, well, this much came in, we're going to spend this, we're going to spend this, and I hope to have profit at the end, you will probably rarely have profit at the end because all those things get spent as you go along. Okay, so the flow of money, like we said, it's a lot opposite here than a lot of businesses and a lot of real estate places to look at.
Hey, Mike, is that 40% before taxes? Is that what we're working off of?
That is the gross commission part. So technically, if you do your taxes right, you're being taxed on that 40%. In other words, if you've kept good records, and I'll show you how I do records and how I used to. I found these the other day, but here are my receipts and records from 2007. This is when Dave and I were both at Coldwell before. But I keep track of everything. I call my accountant my get out of jail guy. I'm going to try and deduct everything, and you have to keep me legal. That's what I tell him every year. So, but you know, if you go to have, sorry, that went away. If you have lunch while you're on business, you can count that. And I'm not a tax attorney, so don't, double check all this. I hope you're keeping track of mileage every day. There's apps. I just use a notebook still. There's all different ways, but being a real estate workaholic, most of your life is a tax deduction. That's the crazy thing of it. If you go to St. Louis on a trip for some reason and you happen to stop by a real estate office and get connected with somebody for a referral, it's possible to deduct part of that as cost of business. So again, I'm not a tax attorney. Don't take what I say for legal and for keeping you out of jail, but there's a lot of things you can do that will help you reduce or spend money on the top before you get taxed on it.
So are we writing off like the broker's 30% also, or do we just work off of what we get our check from, and how does?
I work it off of what my 1099s say, because that's technically what's being paid to me. So the broker commissions don't really, that's what we call gross commission income. But since that never actually sees you or sees your pocketbook, you're not taxed on that.
Thank you.
Okay. So most places look at income as what goes in, and then the expenses, like we were just saying earlier, and whatever's left is the profit. But what we'd prefer most of our agents to do is put profit as the goal. And then do everything you can to minimize expenses. And then the income on the bottom is how much it's kind of a reverse way to look at it. It's how many homes do I have to sell to keep these other two things going. And this is where it says these questions, there are questions they have on page 7 of your participant guide, but I don't have those questions. So I don't know what those are. Did anybody see what those are?
What's it called?
It says there's questions that can be found on page 7 of your participant guide.
I don't know where that, I
Okay.
haven't seen the participant guide.
Okay. Well, I do see 3 questions here. These are questions, not that we're answering out loud, but how much money do you want in your bank account at the end of the year? Number 2, how many homes do I need to sell to achieve my profit goal? Not your income goal, but your profit goal. And number 3, how can I minimize my expenses to maximize my net income? So those are 3 things they put on my slides. I didn't get to all 7, but that's the idea. So look, you want to really look at what you want to have in the bank. Now, my first goal is to either have 3 or 6 months backup income or backup money sitting there, just in case, because I've had seasons. I remember one year I went January, February, March, April, 4 months with no closings. So you want to have a backup there just so you can get through those seasons. And like when David and I got in, or we're in 2007, as Jim said at team meeting the other day, you would have listings that had birthdays. Listings would sit on the market forever. And you saw a lot of agents that did not make it through there because they were spending everything. Like this thing shows, everything came in, they were spending it right away. And the market we're in right now, they're saying it's going to last 3 or 4 years, but we really don't know. So you want to have a safety fund sitting there. Okay, so in real estate, they basically say our income, the money coming in, comes from 4 spots: listing income, sales income, referral income, leasing income. Do any of you do leasing stuff? I do not. I tried being a landlord once. That is not my thing. I can't do that personality. Referrals, I don't have that many referrals. I know some people who have tons of it because they've got connections around the country, but referrals basically means you're making connections across the country, they're selling it, and you're getting a referral check. Most of us is the top 2, the listing income and the sales income, which basically is the same, every house sale. That's the income side. The expenses, and I get a little confused with how Keller Williams divides some of this, but they have what's called cost of sale. The cost relates to each transaction you make. So in other words, every listing probably has a cost of a photographer, or things that you have as a cost each time. If you have a transaction coordinator, every time you have a transaction, that's a cost of sale. It also lists royalties, fees paid to KW, and like you asked Josh earlier, that really, I don't know how to apply that because we don't really see that money. So that technically isn't any dollars we have to worry about because it never shows up in our pocket to.
It's sort of a deduction already removed.
Right, but no credit for a deduction or anything like that. So it's something to keep in mind, but it's not like we're seeing it.
Hey, Mike, quick question for you.
Uh-huh.
The royalties paid to Keller Williams International, are those taken out before we get the money, like on 1099? Like we don't need to deduct that after the fact either?
No, because have you had any checks come through yet, Nathan?
No, I'm having my first closing tomorrow at 10.
Yay. Okay, so once you get it through the system, you'll get what's called a DA, disbursement authorization. And that will show, I wish it showed gross commission income, but they don't. And I'm sorry when I'm looking at you all on the screen, it looks like I'm looking away from my camera, but basically it'll show how much came into you, how much was deducted for market share, which is the market center percentage, and then royalty. And those keep a rolling tally, and you can find those in KW or mykw.kw.com. It'll show all your breakdowns. It updates each month. So like if you do a deal tomorrow, that will not show until the March 1 transmittal. But it all comes out, you get the remains afterwards. You don't have to worry about it because KW makes sure they take their money from us before we give it to you all. So That's
Thank
kind of
you.
how it works. Okay, so the cost of sales, let me see what it has on my notes here. Here's what I'm supposed to say. It's important to understand the cost of being in business with the market center. In our case, the cost of the company dollar we were talking about, royalty, referral fees owed to the market center. What is the market center cap? We all know what that is here. It tells you to write in the cap on page 9, but I don't think any of you have that form, so we're not going to worry about that. Okay, but once you get past cap, and this is the form it was showing me that I think it wanted you to
It's
fill
on
out.
the page 9 of the element handbook, element 8.
Is it the same thing I just threw up here?
Same thing you got right there, yeah, it's on
Okay.
page 1.
Okay, so let's just go through that one for a second. So the number I like to use is 6,000 because that's if you sold a $200,000 house. Now, technically, right now, our average is 225, but the 6,000 is a lot easier to deal with. So on that first box, 6,000 would be the amount coming in, minus your company dollar, which is 30% times 0.3. Is that 1,800? Is that what everybody gets? And then the 6% is the royalty, 6,000 times 0.06, 360. So if you are not capped, your money after a $6,000 closing will be 6,000 minus 1,800 minus 360. So your amount would be 4,560. Now, what's interesting on second part there. So, hi there.
Are you recording?
We're recording.
Great.
They got to check up on me, make sure I do things right. So on that first example, the check to you on a $6,000 sale is $4,560. Now on number 2, sometimes you will cap with the market center before you cap with royalty. More often than not, though, I see it the vice versa. Because if you have a transaction fee that comes in, royalty gets collected on that, but market center cap doesn't. So sometimes you get that paid off before. But let's say let's say item 2, let's say it's the $6,000 again, and you've already capped on your royalty. Your check then would be 6,000, minus 1,800. If I hit the right buttons, it would be 4,200. But more often than not, those two happen pretty close to each other. And at a $225,000 sale, the average number of units to the cap is 9.8 units. I know that number because I do that in Career Expo all day long.
Mike, can you go over a little of the details of the cap?
Yeah, meaning, for example,
Is there a cap on amount of houses or total cost? It's something I'm not.
so the cap is the amount of money you're going to pay into the market center total, and that is $20,000. So if you sell a $3 million house, 1, 2, 3 times 0.03, you basically almost capped in one deal. If you sell $50,000 houses, you're going to have to sell a lot of them to cap.
Is this a year number?
Right. Yeah, because the cap resets every year. And it's not based on January, it's based on the month you join the market. So and I think most of us are probably January. That's when mine started. But so the cap, here's 2 things I love about the cap when I talk with people about this. We're all equal to this, we're all worth the same to the company. So that means if we have an agent who's not doing things the way they should, like we had one 2 or 3 years ago, that was actually adding things to contracts after people signed them. That was a $15 million a year producer. Where I was before, if it's a high producer, they might let them slide because that's a lot of money coming in. Here, every one of us is worth the same. So it's a very easy way to keep our culture intact.
Be careful, you showed us where you were before.
No. And that one doesn't exist anymore either. So it's a new Coldwell in town now. But there were times when some of the high producers, the ones selling 40, 50 million a year, if they want to slide on things, it would be overlooked a little bit. you know, because they were, okay, 40 million times, they paid on every deal. So there was no cap. So 40 million times 0.03 means they would have brought in $120,000 times 0.10, because they were paying 10% on each deal. I did math wrong. But I know the last year with the person I was teamed up with, our royalty amount we paid to Coldwell Baker Corporate was close to $34,000. So the cap, it does two things. Number one, it keeps our expenses limited. Actually, that's not the two things. The one I like is it keeps us all equal, but it also is why all of our agents want to help each other so much, because the cap and the profit share system make everybody succeed when everybody succeeds. So it's not a system where the big dogs want to get bigger because then we make more money. Adam Grady, Dan Holt, they pay the same amount as me. I'm equal to them as far as the company is concerned. So that's why a lot of our things are geared towards newer agents, middle of the road agents, because we're all equal. And it's really a cool feeling that we all have the same value to the company. So I kind of like that. But anyway, so so that's what the cap is. Does that make sense, Josh?
It does. Does any sort of team or being by yourself affect those numbers at all?
If you're on a team, like for example, the Kellys who are on my team, I am the rainmaker. I think that's a stupid phrase, but since they are on a team, their cap is 7,000. But a portion of every sale they do has to go into the team. So it's a little mix there. And then on the other side, where's it going? I had a thought, it was gone. Oh, as the teams get bigger and bigger, at some point, we're hoping to institute what's called the team cap, where there's one cap for a large group. That's a trend nationwide. It's not here yet. But that's kind of the next thing that might be coming here.
So a team has like a $20,000 cap the same way as one person does?
No, it'd be like 60, 70, something like that. So
Nationwide, but right now, everybody, like you said, Grady, for instance, paid like, so each individual person, but how does the 7,000 translate into 20,000? That threw me off.
It's part of the idea that Keller Williams grows teams. Because if you're on a team and you were still paying 20,000, you would not be able to afford it as well, because a portion of what you're doing is going to the team, and every team is built up different on how they pay out. So it gets very complicated quickly. But sometimes it makes more sense to be there and have leads coming through than just be on your own. But most agents have an ego, and that's why they got into this, to have their name out there. And the cap is very confusing if you talk to anybody from a company that doesn't have one. It's a foreign concept to them because they're used to paying every time they sell a house. But I know that's a quick sum up. Does that kind of make sense on it?
It does. Thank you.
Yep. Royalty, though, everybody has royalty because that's our part of being part of the franchise. And I tell people all the time, you're paying a franchise, take advantage of what you get from that. The Keller Williams University, excuse me, the designs in command. You have all this stuff created so you don't have to go out and recreate it. It's actually worth a lot more than $3,000. So use those things and you'll be amazed how it'll help build your business. Okay. Sorry, throat is dry. So that's the basic models of how our systems work here compared to others. Now let's try to figure out how to plan that as we go ahead. So here we're supposed to spend 10 minutes and we're supposed to help you determine how you'll achieve your profit goal. We'll be working backward from budget. I think we're just going to jump into this. And the sample they have on here is working backwards, because when you ask anybody that's joining real estate how much they want to make, what do you think the most common answer is? I say, how much money do you want? How much?
$100,000.
Exactly. That number is the one that comes up a lot. But a lot of people, what they're thinking is that's how much they want to bring in, not how much they want to actually net. So this example is a reverse math thing on if you're trying to net $100,000 as your incomes. In other words, your 40% of what comes in. Okay, and if you want to, you can play along at home on this, but if our net profit goal is 100%, to get your gross profit goal, remember that's 40%, so divide that by 60%. That comes to 166,666. So in other words, that's taking off what's going to be your amount that you need there. Now remember, there's gross income on top of that. So divide that number by 40%. To bring home $100,000, you really need to bring in gross commission income of 416,666. Now, why is that? Again, if I take 416,666 times 0.3, that says, 416,666.3. My operating expenses at that level will be 124,000. My cost of sale will be 124,000. I get the other 40%, which is 100,000. Now we could just as easily do this and say that our net profit goal was 10%, $10,000. But they're just using kind of the round numbers here. And if we have time, I may pull up one of my Excel sheets that does that too. Okay, so if that's the amount we got to make to take home $100,000, how many houses do we have to sell? Now I'm trying to get down to my questions. Okay, so if our average sales price, and I think the one they used was $7.5 thousand. So if it was, that's about a $250,000 sale, I think. It is. So if our average sales price was $250,000, our average gross commission would be $75,000. How many houses would you have to sell to make 416? It'd be 56 houses. So basically one a week, and then 4 more on top of that. So at that, the anticipated cost of sale, which is royalty and cap, and here's where I get confused on the Keller Williams things. On this, they call cost of sale your royalty and cap. To me, cost of sale is how much you're spending on each sale. You know, if you do a closing gift, if you have a transaction coordinator. So that's where it's a little different to me. But then they show
without any cap, I got 6.93 million is what you'd have to sell. I guess it would probably be less than that considering you would cap out at some point, but
true, but that's probably about right. That's kind of what I figure. Usually I tell people on our career expos around 3 million is going to get you a $75,000 gross commission income, and to get the 200,000 is about 6 million. So doing the numbers, that's probably about right. But this thing, and what I like on this is it makes you start thinking how much more I have to sell. I'm going to jump to a different slide for a second, see if I can get this to pull up. Oh, you get to look at Brown Derby for a second. And I apologize, my computer is really slow because it's really old like me. And this is something I can share with you all too. It's from a class I do called Financial Survival in Real Estate. It started by doing it for college kids because I kept getting so frustrated. They'd get out of school and they'd killed themselves with credit card debt already and couldn't afford a house. Let's find the most current version of this. It's opening, sorry. Once taxes are done for the year, I am getting a new computer because this one's just killing me how slow it is. Excel sheet's showing for you all, correct? So this page is something I use with brand new agents and brand new kids to show them how to figure out what their costs are each month. So like on here, these are your fixed monthly expenses. Here's fixed annual expenses, and I have little codes like that was the board renewal. Here's continuing ed. So this sheet will come all the way down and tell you how much you need in a 3-month emergency fund, 6-month emergency fund. It will also go all the way across and figure annually. And like I said, that's a big deep dive to go into this one. But here's the economic model. So how much volume do you want to sell this year? Let's use that. What number do you say, Josh? 6 million?
6.933 or
Let's use 7 million.
7 million, just under 7.
Okay, and I'm going to see if I can reduce the size this a little bit. Oh, get out of that cell. So you can see more of this at once. Okay, so this is actually the economic model. I made it into a spreadsheet that'll automatically fill. So a lot of times I'll ask somebody, how much do you want to sell this year? And then I ask them, how much do you want to make for GCI? And so we were figuring 100,000, correct? Okay, and what is our average commission amount? Let's use their number for right now. Let's say it was 76.50. And then right here in the middle, before I click on it, these are nationwide averages from Keller Williams people. Typically, 50% of our sales are from listings, which means, so it's a 50-50 split, that's average. Your client conversion rate. In other words, if you have an appointment with people, how likely are you to get them to list with you? Typically, our people are 70%. And then even below that, if you have an appointment, if you can call and get a hold of somebody, once you start talking with them, what's your percentage of getting them to have an appointment with you? So this is kind of reverse numbers. So what this says is, if I call 10 people, I'm going to maybe get 7 of them to have an appointment with me. Of those 7, I'm going to get 70% of them to actually become a client. And of those 7, half of them are going to become an actual sale. So when I click this, it's going to automatically figure all those things. So if our average commission amount was $76.50, we got something different there. Oh, that's to make 100,000 gross commission. Let's go up to, well, we'll use that for right now. So if you want to make 100,000 gross commission income and your average commission was this, you would need to do 13 sales. Now then it comes down here and automatically fills this up. So if we made 100,000 based on the 40-30-30, that means our net income would be 40. We'd have 30 set aside for operating expenses, 30 for cost of sale. Average commission amount again, $76.50, 13 units needed. This right here is just to compare that number to that number. So we're talking apples and oranges at the moment on those. But then it takes this, so that would be to make $40,000. To sell 100,000 gross commission income, average sales price 250,000, you'd need to sell 13 homes. Let's play with that. Let's say you want to make 150,000. Now it's 19 homes, but that means your take-home pay should be 60,000. And when I send this to you all, you can play with this and stick different numbers in. Okay, but to make those 19 sales, what does that mean? Well, over here splits all that out. So to do 19 sales, and again, 50% of our business is buyers, sellers. That means 19.6, half of the units would have to be buyers, half would be sellers. If our conversion rate is typically 70%, that means you would need 14 clients for the year. That's assuming 3 out of 10 are going to fall away on you.
And so 50%, so you're going basically 35% of people that you get on the phone and make an appointment with would be a sale.
Based on national stats and good training, so you know how to talk to them, convert them. So going on those numbers, to sell 19 houses, you probably need 20 selling appointments for the year, 20 buying appointments, which sounds pretty scary, but I have to break it down. You basically need 0.3 buyers and 0.3 sellers a week. And when you look at it that way, it's like, okay, 1 person a week on each side, that could work. So let's go to that 7 million now. 123 times 0.0. So that would be about 7 million would be close to 210,000 gross commission income. So 200, if we're trying to make 210,000, same average commission amount, we now need 27 sales. But if we do that, based on the numbers, that should be a take home of 84,000 before taxes. Let's jump this up even more. Let's go to 250,000. I'm just trying to get to where we have $100,000 coming home. There it is. So 250,000 gross commission income, average sales price of 250,000 would mean you need 32 sales. So you have 100,000 net income. And honestly, these two numbers seem crazy high to me. I mean, that's a lot of money to spend. I think there's cheaper ways to sell real estate than spend 75,000 on operating and 75,000 on cost of sales. But these are the stats nationwide. Okay, so to do that again, 32 sales means you need 2.78 appointments each month on each side. And see, once you get this, you can even change these things around. I think I said it where, let's say you have 40% sellers. It automatically knows 60% over here and adjusts it. But this is a tool I made where you can play around with this and try all the different numbers. It's got the stats for normal, for average around the country, and then you can play with it to see how many sales you need. But I always love this right here, because it tells me if I'm talking to one buyer and one seller a week, I can make these kind of goals. And that's much more doable than telling myself, I gotta sell 32 houses this year. So anyway, that's all side note, but I'll send that to you afterwards. All right, back to our slides. Okay, came back up. So that's basically what this page is doing, but I like automation, so that's why I did an Excel sheet on it. Any questions on that or the numbers? The main thing to me, it's hard to spend $75,000 on cost of sales. I think we can be smarter and more efficient and not have that many costs, and therefore maybe even have higher than 40% income coming in. Oh,
Hey, Mike, can you give some examples of what's included in cost of sales again?
Yeah, well, see, that's where it throws me, because that's a slide a ways back said it's just your market center cost, which is 23,000. And that doesn't make sense to me. To me, I always look at it like on that first spreadsheet I had up, there's my fixed cost for the month, fixed cost for the year, and then there's cost per deal. So like I do use a transaction coordinator. So one cost I have on every sale is transaction coordination. One cost I have on every listing is listing photos. Well, most listings. A cost on every buyer is fuel. That's not really a cost you figure in because you're going to deduct mileage, but I mean, you're driving to show houses. Closing gifts. I typically do like a $50, well, it's actually on a floating scale on how much their house sale was, but $50 to $100 typically on a closing gift. So it's, to me, cost of sale is what costs come every time I sell something, if that makes sense. Everything else, operating expenses, it's stuff I'm going to spend whether I sell a house or not.
Hey, Mike, have you ever seen anybody run a real estate agent as an LLC and then pay out a salary separate?
I do.
Yeah. Hey, I just want to interject on that, Mike. Please do a deep dive into that, because that's something that I want to pursue. So
okay. That's actually much easier now. The state has just changed some of the rules on it. But when you are licensed as an LLC, number one, it's a protection thing. But for example, I get a check, it goes to my LLC checking account. I then also set myself up as a salary. So that's the thing I was talking about down the road. I take a very moderate salary, as little as actually the term the government uses is a reasonable salary. Because whatever you're taking a salary on, you're getting taxed on that. So the more money you can do different ways with, the better. So the goal is to give yourself minimal salary, but enough to where it doesn't raise a red flag with the government.
What
So-
I know you can't give tax advice, but just what have you heard as examples of the minimum amount of salary that, you know, other agents have done?
I think that depends on how much volume you have coming in, but I think a typical thing I see, like if an agent is technically making 90 to 100,000 gross commission income, I'm thinking they're trying to do like three to 4,000 a month, something like that. So it looks like you're making a lot less. I switched to an LLC in the middle of last year, and my tax refund was $15,000. So I don't know all that goes into it because I just, like I said, I hand it off to my accountant, but I set up an LLC, and actually through the Market Center, we've got a system where they will do it for you, get you set up on everything for $500. And there's an accountant tied in with it and an attorney to get all those things from day one. But I have that. Then I ran into a payroll company. A friend of mine, Brian Weimer, owns A Plus Payroll, and I am paying $50 a month to have payroll processed. So I'm getting a salary. Like if I bring on a full-time admin, they would have a salary, and it's basically $50 a month to do salaries for up to 5 people. So I salaried myself this last year. Another cool benefit of that, I now qualify for a house better, because as a 1099 employee, the government doesn't trust you. With a salary, they do, even if it's less money. Makes no sense. But our Market Center has a system where they will help you set all that up and get everything from day one. When you're choosing an LLC name, though, the government has decided you can't use the word real estate or realty or anything that would imply that you're a legal brokerage of your own. And that we're still waiting on the exact rules from that. But you know, that's the way government does. They make a rule and then tell you what it means later.
Do you know if your LLC could encapsulate, like for instance, if you did have investment properties and other things that sort of went along with it, and your LLC was tied into more than one income?
I actually did 2 separate LLCs, one for the real estate and then one for our vacation condos. I don't do long-term rentals. I don't like landlording, but I don't mind vacation rentals where people give you a credit card before they check in. So that's a whole separate LLC, just in case there's a liability thing there, it doesn't come across the real estate one. So, but yeah.
Josh, just to interject, Rachel sent me some information about it. And I think the way the LLC has to be set up is the only purpose of that specific LLC is receiving commissions for real estate purposes. So I think you'd probably have to do separate ones.
Yep.
Based on the info that I had.
It's basically
I figured that it was real estate, but I didn't know if you could tie in, because technically, you know, that is a real estate business. You know, what is the gray area involved?
This one is technically a funnel just to bypass you and pay a company, which then you get taxed at a different rate, which is lower.
Yeah. Okay.
And then by adding the payroll amount like I did, I have payroll taxes taken out from me. So I'm more like an actual civilian than a realtor that way. So, and again, it doesn't take that. Well, you know, Brian. Yeah. Never mind.
Yep. I know him also.
Yeah. So, and what's funny is my accountant owns another payroll company. So I'm like, okay, I have 2 people to choose from, but if you're planning on going big with this, it might make sense to get it set up from the beginning. And I know 500 might be pricey to get it started, but boy, down the long haul, it'll help a ton.
And then I think, Mike, just to elaborate on that, isn't the big benefit of it that you save on paying Social Security and Medicare taxes on anything above your salary? So to use your example, if you're paying yourself $3,000 a month salary, you're only paying Social Security and Medicare taxes on $36,000 a year. The rest you take as distributions from your LLC, and you do not pay Social Security and Medicare on them. Isn't
I
that the
I believe
gist of the
so.
benefit?
And I think there's also something with self-employment tax. I think somehow that gets figured differently too. Because as a
Okay.
realtor, you're paying your own self-employment taxes. But yeah, between those three, it gets beyond me fast. So I just do it and then hand it off to the people to make the numbers work.
And if you're
But
buying
yeah.
a house, then you can start paying yourself $7,000 a month for a few months.
Okay, well, here's what I thought to do. Okay, I have an LLC that owns vacation rentals. What if it bought a house and Mike and Becky rented that house from the LLC? Then the house is now a business expense for the other LLC. So if I have to do a $20,000 repair, is that a business expense? And I've not run that by any accountants yet, but it seems to make sense.
I don't know the answer to that because how would the purchase be financed and where, because
Right.
if it has to be financed under your name, then it probably has to start there. I did have a situation, a person was wanting to do an Airbnb on their house and eventually get return on that. And there's starting to be lenders that are considering this, but the consistency of it. So the idea was, what we came up with was to create an LLC and then personally lease it to the LLC, and then the LLC does the Airbnb.
Yeah, there's a lot of interesting ways. That's where we go to the tax accountants and make sure we're doing it right and legally.
But that was from a mortgage perspective on what would get approved. But I don't know as far as, you might have to buy it under your name and then sell it and deed it to the LLC.
Right. So all that gets interesting. My dad way back owned a funeral home, and he owned the land, and the funeral home company rented it from him. Well, he needed to raise the amount going to himself, but he was at a restricted amount where he couldn't raise the rent on the property or the building anymore. So he started renting the parking lot to himself. So there's always a way to figure something out. So anyway, okay, we'll keep going here. So best practices. Here's what the idea of making the money work for you is for these reasons: to gain clarity on your big life hopes and dreams, set your personal and business budgets, set up your business entity, the kind of stuff we've been talking about, open additional bank accounts for taxes, expenses, and other savings. Okay, we're going to stop for a second. The plan or the program that Keller Williams suggests is 3 different accounts: one that your tax money goes into, one that your expenses goes into, and one for other savings. I had never heard that because I've only been here 2 years. So I have a business account, and from there, the other 2 are a savings account under it. So every check I get, there's an escrow amount that I escrow for myself that goes into the savings account, and then I have it divided in an Excel sheet between this much is taxes, this much is savings, that kind of stuff. But the idea is make it hard to get to that money. You've got to save it for taxes and for other things. So don't make it to where you could just have a credit card or a debit card that pulls the money out right away. Okay, going on then. Purchase, download tax accounting software. I've been using QuickBooks and it seems to work pretty easy. There is a monthly fee to it, but the main thing is get a system and start using it. Also, the MREA chart of accounts, I found that and I can send it to you all as an Excel sheet too. It's a bit hairy. I was looking at it going, man, that's a lot for starting, but at least it kind of give you the layout of it. Hire an accountant, CPA attorney, set dates to calculate and pay your estimated taxes, and prepare for your future with the insurance, savings, and investments. That's the reason for getting all this going from the beginning, is so you can have all this. You got to think like a business rather than just an individual with a real estate hobby. Thoughts or questions on any of those things? And that's not an exhaustive list. That's just a list they say is the best to help get you started. Okay, going on. Daily success habits. Okay, as part of Ignite, and it's again the concept or the hope is you can add 10 contacts every day to command, have 10 conversations, try and do 10 handwritten notes and 10 home previews per week. My team is big on events. We're sponsors of Little Theater. And the thing that we've learned and the thing I've been hearing over and over nationwide, the purpose of an event is to have something to have a conversation with. everything goes back to conversations and relationships with people. I've rented billboards. I've had radio ads. None of that stuff makes a difference compared to personal conversations. So the more you can do this, are you all using Command already for your database too? I see some nods.
I just get onboarded on Friday, so.
Okay, you're early on. Cool. So yeah, so Command will help organize everything. And if you haven't used it much, and this is still in the baby steps. Okay, the red thing on there is the Command app, which is getting more and more robust. And I'm guessing at Family Reunion this week, they're going to announce, and usually they do more updates right then. They have a bunch of stuff that gets loaded. And for some reason, mine won't load at the moment. They might be doing updates for Family Reunion, but that will help because the top box of it says task for today. There we go. I don't know if it'll show. Due today. That's people I need to talk to.
Hey, you've got a bunch of past due tasks there, Mike. What the heck?
I know. And one thing I've noticed, if I do them on the computer, it's not syncing right away. But yeah, so there's my tasks, if it'll show them. I got to call some people for their birthday. I've got to talk to some other people who are possibly new agents. But yeah, it shows me every day what I got to do. And it'll help. Okay, and the worst thing, that little chime up top, it doesn't show much. 47 alerts. And that's stuff from Twilio, from text messaging, and from like compliance things. But that is going to be where you could run your whole office from here. And again, it's part of our money we pay each month anyway. I know some people in our company, they're still paying $1,000 to $2,000 a month for a CRM when Command will do everything you need. So you might as well start with it from the beginning. That's how you get paid anyway. You might as well have the whole system working towards commissions on it. Okay. Here's what I'm supposed to say to you all now. And how's Ed doing? I haven't heard anything from you. All this making sense?
Yeah, all of it's making sense. Thank you.
Cool. No questions so far. Must be excellent teaching. All right. Okay, the goal of our time together is to help you think, feel, act, and use what you've learned to ignite your passion and help you achieve your big why. That's what I keep coming back to on why do we make the money? Why do we do all this? What is it? What is the big reason that you have the career you do, or that you do anything? And what's interesting, that changes over time. What I've noticed, this is my fourth career. I was a band director for 14 years. Then I worked for a music store. Then I was in totally real estate sales, and now I'm more in the leadership coaching side. I got to thinking, what is the theme from these four that are like way over here? And it's actually written right here on my computer. You can't see it, but every one of them was a spot that I could do things to change people's lives. And that I realized that's what I like doing. And that's my big why of why I do what I do, is because if I can help somebody's life get better, like, taking the group to Family Reunion, I'm an Orlando nut. And by helping them have a cool experience there, that can be life-changing. So it doesn't mean monumentally changing everything. It means, what can I do to add something cool to somebody's life? But that's why we're in business in the first place. I was blessed that I was able to pay for my kids' tuition. That changed their life. I remember paying school back forever. So anything we do as a profit, what is it going to do to change your life, your family's life, strangers? That's the big reason for whatever we do. In fact, I don't know if I can stretch. These are folders I use when I'm talking with agents, newer agents. And number one, this side, the first thing is God, family, then business. I think that's backwards. It's hard to see on that screen. And then this one, the first thing on there. What is your big why? And that's not just the financial side, as I throw papers everywhere. But think about what the big thing in life is. What excites you? What is the reason for doing all this work? Because as we all know, real estate's a ton of work. It's dealing with people in a big life transition. So That's your homework. Figure out in the next 5 to 10 years what your big why is. Because like I said, mine's changed over time. Okay, elementals, like I said before, the goal again is conversations, relationships. Even though this is the financial based class, I was supposed to make sure to give you this reminder. Try to add 10 contacts to command, 10 conversations. Those could be the same 2 people. You know, go through Facebook, look at people you haven't talked to in a while, find someone there. 10 handwritten notes. My handwriting's awful, so I don't do that as much because nobody can read it. One year I sent Christmas cards to the band directors when I was calling on them, and one of them said, I couldn't figure out why I got this note from a 6th grader, because that's the way my handwriting looked to him. So, and 10 home previews per week. That is hard to do. Okay, David, you remember when we were at Coldwell and they did tour? That is one thing I missed that we don't do anymore. Every Tuesday we went on tour of the new listings. Now on though, they'd all be sold, so we wouldn't be able to. But that's how you learn inventory, is by going to homes and taking a look at them. So especially what I would try and do during this next week, once the weather gets safer, pull up 10 vacant houses that are in an area you like to work in, and just go try and take a look at them. Even if they're pending, you can still go look, just check with the agent, make sure they know why you're going. Just say, hey, just wanted to preview it in case it comes back on the market or something. Scripts. Again, all this rolls back to the other. We're supposed to take a 30-minute gap for role play and script practice, but I think during elementals, we've just been doing that on our own, correct? Because it'd be silly to let this thing keep recording for 30 minutes with nobody sitting here. But lead generation, uncover motivations, identify objections. That's, and I know once Mark Stewart's done with Bowl down in Arkansas, he does script practice. I think it's Tuesday mornings here in the market center. And it's a great time to come in right before team meeting and do a lot of script practicing. And Mark is great at those. But lead generating, that's the main job we're in. The more we can talk to people, the more we can have those relationships, that's where the business comes from. Okay, script practice. Don't call people you're not supposed to. Do not get sued. That comes in on everything we do anymore. And then it says we have lead generation scripts for an hour. So basically, that's the stuff we need to get through. Financial side, what questions are there? I'm going to jump back to that screen. And I need to make sure that I get everybody's. If everybody in the chat could throw your email address, I will send you that Excel sheet that shows, you know, it has the economic model. It has a couple other things on there I use too, but that way I can get those to you. I'm going to hopefully be able to cut and paste all these at once. Let's see, Nate, is yours on there yet?
I'm working on it.
Okay. And Josh has run away on us. Oh, took away our screen. Ooh, NathanBlanton.com.
Hey, it's only $6 a month through Google, and it has your own, you know, you got your own domain name, your own email, $6 a month. It's basically Gmail, but it's your own domain name.
Interesting.
So, works well.
I had to go through GoDaddy to get my stuff. So, okay, well, I'll send that Excel sheet to people. And if you know, make a hard copy that you keep, or not a hard copy, but a master copy, and then you can mess with it and just do experimenting to see how much you have to make or how many sales you have to do to hit the different levels. Anything else, or did I do good?
You did great.
Josh, send me.
It's great. Thank you.
Josh, send me your message and subject. Or was that Ed that said that?
No, that was me. I was over there getting something out of the oven. So.
Ah, hey, so we're all having lunch over at Josh's. Very cool. All right, gang. Well, thanks for joining us. I think tomorrow is the final of Ignite. and stay warm and dry. Is it still doing bad stuff out there?
Thanks, Mike.
All right, we will see you all. I'm going to kill this thing, so we'll see you later.
Thank you.
See if I can find the right button.
Thanks again, Mike.
Thanks so much.